There we go. Okay, I've started the recording. You guys can see my screen. So Henning says options combos are too expensive and too low liquidity. So I was agreeing and disagreeing. I think they're not too expensive. I think that options are valued based on a bunch of different things, right? And implied volatility is a very powerful factor. And the higher the implied volatility, the higher the option premiums are, right? So that's why option premiums start getting more expensive as you approach an earnings event. That's why a lot of options traders sell option strategies at earnings events because premiums are so high. They're so high because implied volatility has been increasing. So that's why selling option strategies has become a very popular thing, especially when IV is high right before an earnings event. A lot of traders like selling, credit spreads or put spreads or both, creating the iron condor, right? So, but you're right about liquidity because the more contracts you put out there in one order, the harder it is to get that order filled. If you're just trying to buy a call, that's a pretty easy fill. You can put your order in at the midpoint price, and if it's any kind of liquidity in that stock, you're very likely to get filled at the midpoint price. But when you put in a spread order where you're trying to buy a call at a certain strike, sell a call at another strike, you've just decreased the chances of getting filled at midpoint pricing by some factor. Depending on the stock, depending on volume, depending on implied volatility, depending on a lot of different moving parts. But as soon as you start adding contracts and you ask all those contracts to get filled at the same time, yeah, it starts getting to a little bit. You've reduced you've reduced your chances, like I said it the first time. You've reduced your chances by some factor of getting filled at the midpoint price. Doesn't mean you can't get filled at the midpoint price. No, not at all. Again, it depends on all these different moving parts. So anyway, interesting stuff. Love it. Love trading options. Been doing it for, let's see, it's 2021. So almost 20 years. Almost 20 years now that I've been trading options. All right, so let's get into today's topic. I think this is kind of long overdue. And before I do that, I just want to invite everybody. We do have room. Let me jump over before we get started. We do have room for a few more traders to take the Double Eagle course. So we just got started. Yesterday was our first Monday. Let me just show you, if you're interested at all, if you missed, here's the website for the Double Eagle course. It's called doubleeagleworkshop.com. And if you're not familiar with the Double Eagle, I won't spend any time on this, just 1 minute here. If you're not familiar with the Double Eagle, it is my personal go-to strategy. It's what I trade pretty much. I have one of these trades. I have multiple of these trades on every day of the year, 365 days a year. And if you scroll down to the bottom of this first page and you don't know anything about it, you can click this link, and there is a YouTube video here that was just put out 2 weeks ago that describes the strategy. You just scroll down, doubleeagleworkshop.com, scroll down to the bottom of this page, hit that video link, and you can learn about. We have a few more seats left, and it's not too late to join. There's been 2 3-hour classes so far. Actually, the Saturday class went a little bit long, and yesterday was a 3-hour class. And there will be 3 more 3-hour classes coming up over the next 3 weeks. And then you go over here to these other pages, and it will tell you what's included in the workshop, et cetera, et cetera, et cetera. Okay, enough of that. All right, let's get started with our presentation today. let's see. First of all, the preliminaries. Read and understand the CFTC rule before you risk your hard-earned money in the markets. The disclaimer tells you that we are not licensed financial advisors. We are not registered investment advisors. We do not provide investment advice or financial advice, or we do not make recommendations. These webinars are given to you for educational purposes only, etc., etc. I am Marco. This is my email address. Please feel free to shoot me an email, ask me your questions, give me comments, give me some feedback, give me your constructive criticism. I can take it. All right, so before we get in, the topic today is going to be about this. Let's jump over to the Option Slam website a quick minute. And before we get into those slides, let's take a look at the earning stock screener. Okay, we go to the stock screener. And I have a bunch of different screeners up here that I've saved. You can save them too just by simply filling out whichever criteria, whichever filters you want to fill out. Ignore the ones you don't want to fill out. And then you come down here and hit the submit button. And if you like the screening filters that you saved up here, you just click save. And a screen will pop up and it'll ask you to give your screener a name. I gave mine a few different names: front ratio, generic, iron condor, negative expectancy. Now these two here, negative expectancy and positive expectancy, have everything to do with this filter right here. Let me see. I'm going to practice using my drawing tools because I need to get good at these. I've been slacking off. I need to learn how to, so let me experiment on this with you guys using my drawing tools, my annotation tools. So this section right here called mean and median calculations, tracking price change one day after the earnings release, okay? One day after the earnings release. And my positive expectancy, negative expectancy, pre-saved screener filters have to do with this section and this area here, okay? So we're going to talk about that, okay? And then back to this being live. I'm going to just start out by hitting my generic screener, which what that does is it presets, it tells the screener a preset of screenings. It sets this to 1 week from today. I can override that on the fly. I can just see who's reporting today or who's reporting 2 weeks from today. But I've got it set at 1 week from today, and I can leave that or I can override it. Stocks with weekly options, all markets, no EVR settings, stocks that trade at $20 or more. I could put a maximum over here if I don't want to trade expensive stocks, but I don't mind expensive stocks, especially with options. With options, that's one of the advantages to trading options. We can trade options on stocks we can't afford to buy. It's great. Who would have thunk it, right? In fact, we can control 100 shares of a stock we can't even afford to buy. Yeah, it's pretty awesome. And then I've got my minimum average daily volume set to 2 million. That ensures me some kind of liquidity. That way I'm not going to be looking at stocks that are totally impossible to trade because nobody trades them, right? So, and that's it. That's all the filters I have. Right here even though, oops, these pop-ups are drive me nuts. But in our next iteration, we're getting rid of those pop-ups. I know it's been a long time coming. I can't tell you the issues I've run into, but it says sort by earnings date. It didn't sort by earnings date. It sorted by alphabetical. All I got to do to get it to sort by earnings date is just hit my submit button, and then it will correct. and we'll actually sort by earnings date. Now you can see it's sorting by earnings date. Now, Home Depot already reported this morning before the open. Excuse me, May 18th before the open. Yeah, May 18th, that's this morning. So it's giving me some stocks that reported already this morning before the open. And then it gives me the rest of the stocks today after the close, tomorrow before the open, et cetera, et cetera. And there's just one page of results here, a total number of 21 with that simple filtering criteria that I put up there. Now, again, back to our subject. That is absolute versus raw. Okay, what is the advantage of that? Well, when we come down here, we have this section right here. This section right here, okay, these 4 columns, and then I gotta see if how can I get back to, yeah, excuse me, I apologize. I need to try to figure out how to, I'm trying to learn. I wanted to leave my image on there, but then I want to go back to using the screen live. And I don't know if it'll let me do that. So I'll just erase that. Now it lets me use the screen lives again. So anyway, all right, mean and median, mean raw and median raw. Okay, so there's 4 columns. Mean, now this, I didn't write the name here, but this is what we consider absolute numbers, and these are raw numbers. So what do we mean by that? First of all, let's define mean and median, and then let's define absolute and raw, okay? Let's do that. Now, mean is the average. We all know what average is. Some people aren't used to the terminology mean. Mean equals average, okay? It's the same thing. So I'm not gonna go into how to calculate average. If you don't know how to calculate average, then, well, I don't wanna say that, but go back to school, right? But a lot of people don't understand median, and I think of median as the middle. Median is really not complicated at all. So I found this example just by doing a quick cursory search on my new favorite browser search engine, DuckDuckGo, instead of the G word. 11 batteries are tested to see how long they last. Their lifetimes in hours are given 10, 99, 100, etc. Okay, up to 131. So this one didn't do very good. It only lasted 10 hours. This one lasted 131 hours. Really good. That's the best. The purpose of median is to help filter out outliers, okay? So here, let's answer this question. Why would I even want to look at the median? Why not just use the average, Marco? Average, everybody accepts average. Everybody knows what average is. Why should I even think about looking at the median or being aware of the median? The answer is because average or mean numbers take into consideration outliers, and they can really throw off your perception of what the true averages of the numbers that really count. So as I look at this set of data here, I see an outlier. I see this 10 is an outlier. It is just so far away from 99 and 100. And 130, 131 are both kind of outliers because they're so far away, not as far away as 10 is from 99. But look at the middle numbers: 100, 103, 103, 105, 110, 111, 115. So the range, if you will, the predominant range is right here. That's where those are the numbers that are all kind of close together within a very tight range. These are batteries, okay? Batteries that all produced, 99 was the worst one, 115 was the best one, but here's a couple batteries that really super performed, right? The super performers, I'm going to call those outliers, okay? And the underperformer is another outlier. So that's why we would consider using median, because median throws out those outliers. It just throws them out. Doesn't even take them into consideration just by its very design. So that's why we use it. How do we calculate it? Before I do that, I think there is one more. Now, the way to calculate it is I'll show you how we calculate it. All right, what we do, and I'm just going to do this the old-fashioned way. Let's count the numbers. We got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. Well, when there's an odd number, of data set, it's easy. It's going to be the middle number. I'm going to throw out the top 5, and I'm going to throw out the bottom 5. I'm just going to throw those out, and the middle number is the median. That is the median. Okay? You with me so far? So the median is 105. The average is going to take into consideration these outliers. So I'm trying to get rid of those outliers and that happens with stock data and stock information and options pricing and when you have an earnings event and then the stock moves 2.5 standard deviations, that's an outlier. Stocks don't usually move 2 and 3 standard deviations, right? Those are outlier moves. So those are the reasons that we produce and publish median numbers in our data at optionslam.com. All right. So let's move on. What if there's an even number? Okay. So since there's I forgot to read this. Okay. Since there's an odd number of data values, this corresponds to a line with an odd number of people. This should say battery hours. The center will be the middle value. I just demonstrated that, and we found out. We threw out the top 5, we threw out the bottom 5, and we just keep throwing them out, all the numbers, until we get to the middle. And that's how you get the median there. What if you had an even number? Okay. Like here, we got a data set of 8 numbers, okay? So if you have an even number, it's still the same way. It's still kind of the same way. Here we have 8 numbers, so let's throw out the bottom 3, let's throw out the top 3, and there is no middle number. There's 2 middle numbers, right? I can't throw these out, or I don't have anything left to work with. So the answer now is it's the average of these two. The average of these 2 numbers, what's in the middle between 05, what's in the middle between 05 and 110? Well, you just add the 2 together, divide by 2. It's the average of the middle 2 numbers is the median. So the median is 107.50. All right? So that's how we calculate it. That's what it means. That's why we use it. Let's move on to the next bit of information, and that is, what is this business of absolute versus raw? Absolute versus raw calculation examples, okay? Absolute versus raw calculation examples, and instead of using battery life, I'm going to actually use stock movement, okay? Price movements one day after a stock or a company, that is, a company reports its earnings events, its earnings announcement. We call it ER for short at optionslam.com, earnings release. ER, we call it. So here, this fictitious stock, XYZ, I don't think there's a real stock called XYZ. Maybe there is, and I haven't looked lately. But who knows? They're coming up with all kinds of names. Stock XYZ, based on the 4 previous earnings, okay, we're going to look at the 4 previous earnings movements, the one-day moves. It had a move up 10%. The stock moved, had an earnings announcement. We're looking at 4 previous quarters, okay? It had a move up 10, down 8, down 6, and up 12. There's our data set. That's it. We're only going to look at 4. We could look at 8. We could look at 12. We could look at more, but keep this simple. We're going to look at those 4. And absolute mean, the absolute mean or median, doesn't matter whether we're talking about mean or median. The absolute mean and median, but in this example, we're looking at mean, the absolute ignores positive and negative numbers versus negative numbers. So it ignores that minus sign. It ignores that minus sign. It looks at the data as if these are all positive numbers. We're just looking for the magnitude of the move. We are ignoring whether that move was positive or negative. We're ignoring that. We just want to get a feel for, and why would we do this? We just want to get a feel for how much does this stock move on earnings events, irregardless of whether that move was an up move or a down move. How volatile is how sensitive is this stock to earnings events? In fact, this is what we use when we calculate. This is part of our formula in calculating our EVR at optionslam.com, our earnings volatility rating. Earnings volatility rating doesn't care whether the move was up or down. It just wants to dial in on how volatile that stock is, how sensitive that stock is to its earnings event. You can look up EVR at the help menu at optionslam.com if you want to learn about EVR. But anyway, that's a little bit of a sidetrack there. So therefore, if we're going to throw out the negative numbers in this case, we're just going to take the absolute numbers, okay? 10, a positive 8, a positive 6, and the positive 12. Add those up, divide by 4, and that gives us the mean, also called the average. Sum those up, divide by 4, the average is 9. Okay. Now I could do the same thing with the median calculation. I didn't draw an example of that, but we could do that. We would put these numbers in order. We would do 6, 8, 10, and 12. We throw out the 6, we throw out the 12, and we'd find that the median is between the two middle numbers. Like our last example, our two middle numbers are 6 and 8. Excuse me, our middle numbers are 8 and 10. 8 and 10. Okay. I'm not going to draw that. I was getting tempted to get my pencil out and to practice drawing, but I'm not going to waste time on that. So let's do it again. Let's do it again verbally. If I put these in line, 6, 8, 10, 12, I would throw out the 6, I would throw out the 12, I would be left with the 8 and the 10 in the middle, and the median would be between the 8 and the 10. It would also be 9. Okay, so the 9 in this example, the median is the same as the mean. Not always the case, but it is the case in this example because the numbers are so close together, 6, 8, 10, and 12. There are no real big outliers there, but as you guys know, when you look at stock data, oftentimes there are outliers, and then it becomes important to throw out those outliers to get a better assessment of what's really in the numbers and what to help us assess trade ideas and strategy. So raw mean uses the negative numbers. I should have used parentheses instead of just these minuses. That's a little confusing. We're not doing subtraction and addition here. I'm just identifying that I should have done this differently because I certainly don't mean to confuse. I'm trying to clear things up here. Raw uses the positive and negative numbers. Therefore, it looks at a positive 10, okay, and actually, I guess you can do the math. A positive 10 plus a negative 8 plus a negative 6 plus a positive 12. So if we do that, and let's just do it together. Positive 10 less, added to a -8, that would be a 2. Added to a -6, that would be a -4. And then a positive 12 would take us to a +8. A +8 is the sum of these numbers, which was our original data set, divided by 4 equals 2. Bam. All right. So there is the raw calculation, gives us a 2, a +2 in this example, and the absolute gave us a 9. Both positive numbers in this example. All right, so hopefully that helps define those words of absolute and raw, median and mean. Let's go back to the optionslam.com. Now, let's take a look here. Closing 1 day price change. You see that over previous 8 earnings. Well, why is that column titled that? It's simply because that's the default in this area. If I change the default and I don't put any filters and numbers in here, I'm just going to change the default to be based on maximum movements. Let's define let's define closing movements to maximum movements to make sure there's no misunderstanding there. So let's go over to somebody who's going to be reporting today after the close. JD is an excellent example. All right, today after the close, no, tomorrow before the open, JD. So I'm going to right click on that, open that in a new window. I'm going to here we are at JD's earnings history page, okay, the earnings history page. And we're here just to simply define closing move versus max move. So last earnings event, March 11th, okay, just recently, March 11th, the stock closed at $89 prior to the earnings release, and then it opened the next morning up 5.5%. By the highest it got during the day was only 5.67. That's the maximum amount of percentage of move it had during that 1 day. Okay, and and then it didn't hold that. It started at up 5.45. It moved up sometime during the day all the way up to 5.67, which wasn't very far. But then it gave it all back and ended up closing at only not even 1% over where it closed the previous day. Okay, so that's all interesting information. Let's go back to the screener. So maximum versus closing. The default is closing, I believe. If I change this to maximum and I resubmit, watch what happens to this column right here. Right now it says closing 1 day price change over the previous 8 earnings. That's because the default is closing, and the default is 8 earnings, not one of these other selections, okay? So if I change this and I hit that submit, the name of that column now changes to max a 1 day price move instead of closing 1 day price move, okay? Simply because I changed the filter requirement. If I want to change it to look at more samples or less samples of previous earnings events, and there's reasons why I would do that. There's lots of reasons why I would do that. Depending on the stock, I might think that, oh, I need to look further back in time on this stock, or with some other stocks, I might think, oh, no, I don't want to look too far back in time because, you know, this thing has changed recently. This thing is behaving differently in the most recent year than it was in the previous 3 years. And that happens with a lot of stocks, right? They come back in play or they go out of play. They become more volatile or they become less volatile. They have a huge jump in price or they have a huge fall in price. There's lots of reasons why I might want to change this setting depending on the stock I'm using. So anyway, now I change this default to maximum and based on 12, and I hit the submit button, and now it's going to say max based on 12 earnings simply by hitting that submit button. So I hit that submit button. It changes the column title to max, looking now at 12 earnings backs, and I have statistics. So let's look at the statistics now. Mean and median, absolute, okay, that's the absolute move, ignoring whether it was a positive move or a negative move, and mean and median raw value, where it takes into consideration whether the previous moves were positive or negative. Now, let's go down to JD again. Here's JD in this list. And as I scroll, read across in this list, I see that JD has some positive, pretty strongly positive raw numbers. What does that tell me? Well, without even going to JD's earnings history page, it tells me that this stock reacts positively to earnings events, overall more positively than negatively. And I can differentiate by mean and median. Mean, the average, is up 3.83 looking at the last 12 earnings. But if I throw out the outliers and I just look at what the real most important numbers are, where it really usually moves, and get rid of those outlier moves, the really negative, the very few, probably very, I'm only guessing, very few outlier negative moves, and throw out the super high outlier positive moves, now I'm going to concentrate on this column. The median raw is 5.6. That, folks, is a pretty strong number. Are there stronger numbers? Yeah, here's an 8. Who's that? LB. Okay, LB. Let's right-click LB and open that in a new tab. Okay, what I did there is I went here, I right-clicked, and I chose from the menu, open link in a new tab. If you're using Chrome, this is what you'll get. If you're using a different browser, you'll get maybe some different language, but most browsers have that same capability. We go to LB Brands and we can see it has a very strong 8-point over the last 12 based on max. Okay, so, wait a minute. Personally, I don't care about max move. I'm more interested. Now some people like max move. I personally like closing move. So I'm going to quick change that to close. I'm going to change that to close based on closing movements. I'm going to rerun the data. Option Slam spits out the new information in an instant, in the blink of an eye. And based on closing move, I come down here to LB, and that really put a damper on, okay, see how different that data is? When I was using max move, it was up there at 8. When I use closing move, it really had a dramatic change on the results there, but it's still a pretty good positive number. It's based on closing, and it is not the biggest positive raw median number on the screen, but it is almost the biggest. The only one that's any bigger is SysQ. I can't remember the name of that stock. Canadian Solar. Okay, I don't think I've ever traded that stock. Honestly, I don't think I've ever traded that stock. Canadian Solar has got that's a good number for a solar company. Oh, there's a bigger number. SE. I don't know what that stock is either. SEC Limited. Interesting. Trades over 2 million a day, 4 million. I don't. You guys trade that? I never traded that one. It's a new one on me. Just because it has 4 million shares a day traded, that's stock shares, doesn't mean that options are liquid. The options may not be liquid. I don't know. C Limited. I'll have to look into that one. All right, so we already opened up a page. Now, something that I want to bring to your attention, when I open up a page from this report, When I open up a stock specific page from the report results, and that's what I just did. Remember, we had this report, this screening criteria up here. We used it to develop a report of who's going to be reporting within the next week that meets our screening criteria up above. By the way, I haven't put any numbers in here yet. We're still going to do that. We're still going to do that, but right now I'm just using the data, and all I messed with is the default settings. I changed it. I changed it back to closing. I extended it from 8 to 12. I have other choices. I can extend it down to 4 or up to 16. So here's where we're at. Now, when I open a stock specific page from this report by doing what I did, right clicking and opening in a new tab, what I'm going to get is a report generated earnings history page. In other words, the earnings history page is going to take this data. I'm going to try my drawing tool again. It's going to take this data and it's going to remember that data, and it's going to generate an earnings history report that uses this exact same data. So let's go over to, what was it? LB. All right, so let's just double check LB. Here we are. LB has a, let's just look at the raw numbers, the 4.17 and the 3.64, okay? Wait a minute. Maybe let me try that again, because I didn't see what I was expecting to see. So let's try it again. LB, I'm going to right click and open in a new tab. Okay. And I'm going to 4.17, 3.64. There we go. So we got our it's not giving me those numbers that I expected to see right here. And why is that? It's giving me the closing of 12 earnings. It's giving me the closing of 12 earnings. And it is LB, 4.17 and 3.64. I think that I think that what it's doing is it's giving me the numbers that would be right here, right now, looking back 12 earnings. Okay, so let me illustrate something why it's not giving me those numbers right now, and it's because okay, so I'm gonna. First of all, let me finish explaining that it gives me this report based on the screener criteria that's set up. But if I go to here, to this earnings history, I'm going to right click this and open this in a new tab. This is going to be another earnings history report, but it's going to ignore this criteria of closing movements, 12 earnings back. This report, drawn from the earnings screener, is using closing movements, 12 earnings back, but this one that is drawn from the black navigation bar, the normal navigation bar that we use all the time to go to all these different pages on stock specific, this one is customizable by the user. And you can see right here, this one ignores the closing movements looking back 12. It's just giving me a user defined max move based on 4. And this is something you can actually customize yourself. And the reason we didn't see that data in the other screen over here, okay, is it should show it there. Honestly, it should show it right there, and it's not showing it there. I'll have to talk to the IT team if I can get them to do anything for me Maybe they'll fix that. I don't know. Lately, I've been pulling my hair out trying to get things fixed, honestly. So, but here, let's look. So those numbers should be populated over right here, okay? And they're not. We'll see if we can get that fixed. But let me show you how you can customize this. So let's customize this so it is based on, you simply click on this little icon here, and we'll try it based on closing moves over the last 12 earnings. Submit that change, okay? And now we get the 4.18 and the 3.65. Does that match up with what we had down here? And LB, 4.17, 3.64. This is just a rounding issue. So yes, we got the numbers that we expected to get. There's just apparently there's a rounding issue. That's another thing that my IT team can't make up their mind on, is which way to round numbers sometimes. Believe me, I'm challenged. But I digress. There we go. So there you go. So now you this is powerful. You can set this up to be one other setting here is, so if you like to, if you're like me, I like to set things up based on closing movements. I'd like to see how did the market react, not just at the extremes of one day, but I like to throw out those extremes. I like to, the one way I can throw out those extremes is rather than looking at max moves, I can look at closing moves. The other way I can throw out extremes and outliers is by looking at median column, not the mean columns. I'm very interested to know what the median is. I'm interested to know what the mean is too, but I can compare the two. And if there's a big difference between mean and median, that tells me there's some outliers. Okay. Now, what do I mean by outliers? Well, here's this is a high flying stock. This is a mover on earnings. It is sporting a 4.5 EVR. If we scroll all the way down here, we can see that the EVR is climbing. This thing is getting more volatile as time goes on. It's becoming more sensitive to its earnings events as time goes on. In other words, it's more reactive to earnings now than it was way back here in 2016, okay? It's becoming more volatile and more sensitive to its earnings now, and increasingly so. Kind of an interesting history of EVR on this stock. And we can see that in the data. It's not as apparent because this is a weighted average looking back 12 earnings events. This is just kind of, you can't see it quite clearly here. Now we can see more earnings events here simply by adjusting our numbers, and we can say how many earnings you want to see on a page. Well, let's see 18 earnings events on one page instead of just 10. Okay. Now I can take a look at 18 earnings events. Now I can start to see some patterns. Okay. And it's more volatile. Look at the big numbers in recent history, 18s and 20s, whereas older numbers, there are no 18s and 20s in this older history. Here's a 16, okay? Here's a 14. No, okay? So are you with me? Here's almost 18, a long time ago. All right, so this is data collection and our effort to provide it to you in a way that you can customize it so it makes sense to you and utilize it to design your earnings strategy. All right. Any questions? It says to be calculated after earnings day. Yeah, but that actually could be calculated now. So the reason it says to be calculated after earnings day is right here. That's true. We can't calculate open, high, low, close one trading day after the earnings until they have the earnings and we have one trading day. But this data here can be calculated because it is only looking at historical information. So that's why that column should be populated on this other page. And that's why I was a little surprised when I go, oh, where's my data? I was looking for data here and it's not there. Well, that's just an oversight of our IT team. They overlooked that and I didn't catch it. Honestly, I didn't catch it till right now because I usually don't use this particular earnings history page. I prefer this earnings history page, the one that I customized myself to be what I want it to be. Now, this has value because this is created from the report designed here. So now let's go back to this report and let's see another way that we can use this filter. Okay, taking you to the next step now on this journey of learning about mean and median and absolute and raw. All right. Let's say, just let me put up a set of hypothetical circumstance. Okay, hypothetical circumstance. Let's say we're in a market where for some reason we've determined that earnings events are going to, that stocks are going to, for the most part, I'm making this up now. I'm not saying that this is the case, okay? But I'm just putting out a hypothetical set of circumstances. Super trader has decided in his or her mind that we are in a set of circumstances now where most stocks, or the stocks in the sector that the super trader, guru trader is interested in trading an earnings event with a through the earnings type of a trade, where he or she enters that trade before the earnings event is announced and holds that trade through the earnings event. And super guru trader has decided to take a directional bet, and he thinks that a lot of stocks in a certain sector are going to not do well and they're going to have negative reactions. So super guru trader is looking for stocks that don't do well on earnings, and he thinks that they'll probably even do worse given the set of market conditions right now. Okay, hypothetical. So what super trader could do is say, come in here to median raw value and find a number. Now, this is a minimum number and this is a maximum number. Whoops. Oh, shoot. What a shame. That's my good friend from from Haiti calling, and I have to ignore his call. And I feel terrible, but I can't I should have turned my phone off so I wouldn't be feeling terrible now. And I would have never known he tried to call me. But I have a good friend in Haiti who runs a hospital there. And if you would like to, he's a wonderful guy. He runs a hospital. He does it out of the goodness of his heart. And if you go to, and if you would like to, I donate money to his cause there. If you go to Osapo, let me do this in osapo.org. This is, you can donate money to this organization. This is a 501c, so it is a tax deductible donation. And you can go here and donate money, and you can read all about all of the, this is a story about my friend, a book written about him, and he's a very dear friend of mine. And this is him right here. And these are students. He entertains students from all around the world. So I'll call him back here after we're done with our webinar session today. And but in honor of not answering his phone call, I got a plug in for his awesome charity hospital that he runs in Haiti, helping the poor people of that country. All right, back to, sorry for the interruption. Let's see, back to, okay, so what we can do here is we can go to median raw value, and I was pointing out, it's not real clear here, but I was pointing out that we have a minimum field where you would put your number in here, right? And then we have a maximum field. This could be designed better, obviously, where you would put your number right there, okay? So that's how this is designed. It's not real clear. So if I want to find companies that have not been doing well, let's say I'm a perma bear, I would put if I put a 0 here, okay, and I rerun, all right, so now I'm on closing movements. I'm on the looking back 12 earnings. I'm not changing those. All I did is I put a 0 here and I resubmit. Now I get, notice I went from 21 stocks to only 8. And notice that the median raw numbers are all under 0. They're all very negative numbers. And the most negative number is Kohl's, KSS, has not been looking too good over the last 12 earnings events based on closing numbers. Okay, now let's prove that. Let's go over to Ross Stores. And if I thought, I'm going to open that in a new tab, and we'll take a look. Again, this is the earnings history page generated by the stock screener report. I can simply, if I want to see my other earnings history page, I just have to click on this to go to the normal earnings history page. The only difference between those two is these 4 columns over here. This one is based on what the report required, and the other one here is based on my own personal settings. That's the only difference between these two earnings history pages. I know this has caused some confusion out there in the past, and that's why I'm here to try to clear that up today. Take a look. Something has gone on with Ross over the past. The evolution is there were some positive numbers here going back into the 2017, but then since then, it's pretty rare to see a positive number, okay? And if you look at just the set of data there, it's predominantly red, right? Predominantly red. So that's why if you were a bear and you were bearish on this sector or bearish on this stock, this history gives you more evidence that continuing to be a bear may be a lucrative payoff for you. All right. All right. Any questions? We're running out of room. It's not Ross, it's KSS. Okay, I don't know if I did something wrong, but someone's pointing out to me that I'm not sure what, but let's see. KSS has the biggest negative number there. Okay, you're right. Okay, I see what I did wrong. KSS has the biggest negative number. I didn't follow my line over. Very good point. Thanks for bringing that to my attention. I should have gone to KSS, and that's going to be even more dramatic than Ross because I got confused there and I outlined the wrong number. So let's look at KSS. And you can see now KSS though in the last 2 quarters kind of turned over a new leaf and got some green uh, uh, reaction to earnings reports the last 2 quarters. So has it changed its ways and it's starting to come back? I don't know. Food for thought. But predominantly over the last, again, this is 12. Oh, my settings are set for 18 right now. 18, show 18. Remember, I customized my parameters. By the way, there's one other place you can go to customize your parameters there, and that would be to go here to my profile, and you go to the side. If this isn't showing, it's just down here. All you got to do is click it, show it, and then you have the my profile link, and you can change your preferred email address. Maybe you don't like the email address we're sending emails to, and you want a different email address that you'd like. You can set your settings that you do want to get emails from us. You do want to get the webinar invitations, or you no longer want to get the webinar invitations. You can set your email address, which basically we don't send out newsletters or anything else. We only send out pretty much webinar invitations, but there are some other settings there. I hope to send out newsletters and things like that. Again, looking for maybe a new programmer to get some of this stuff rolling that I'd like to do to help improve optionslam.com. So if you are a Python programmer, please shoot me an email, optionslam.com and gmail.com. If you are a Python programmer or you know of Python programmers, I am in the market. All right. Did you say you looked at more at closing values than at max values? Yeah. Personally, that's my preference. I like closing values. I like to look at this column personally. I like to look at that column. And if you go to our post earnings page on a stock, notice that we don't give a choice here on this. We only look at close. See that? We look at the closing values after these different incremental amounts of days post earnings. We are ignoring the outlier moves, those maximum moves, those extreme moves, throwing those out. We're just looking for the total cumulative at market close 8 days after the earnings event. How did this thing settle out? Okay, 13 days after the earnings event, how did this settle out at the close of that day? All right, thanks everybody for being here. Thanks for your participation. Look forward to seeing you again in the next event. A reminder, we do have a few more seats available at Double Eagle Workshop. If you don't wait too long, because there's not much room left, and we are already underway. We'll provide you the recordings if you join up now. And if you want to learn more about that, scroll to the bottom of this page, doubleeagleworkshop.com, and click on that link to see a video about it. Goodbye for now, and good trading.